So it looks like we turned a corner on gold and silver prices. Lots of questions. The big one, though, is how low can we go? Jerome Powell poked his head up to say that we have a long way to go in the war on inflation. Actually, I don't think he called it a war. I think he said a fight. But my way sounds more dramatic. He did note, though, that inflation is well above the point it should be. Those were his words. No surprise there. I think we'd all agree that, yeah, inflation is higher than it should be. The expectation, though, for 2 more rate hikes, that part's new. And that expectation, that's going to change the outlook for gold in the near future. Rate hikes, they punch treasury yields up. Same for the US dollar in general, and that punches gold prices down. Silver, same thing. It follows in its own way. So, how low can we go? Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. So this whole thing, it's a little bit of a pivot in sentiment. Prices going down, but I'm really just thinking short term personally. All of the things that would push prices up, they're still on the horizon. They just keep getting pushed out. In the meantime, I guess we have lower prices to buy in at. Now, just looking at the charts for a minute, the 100-day moving average, it's at 1942. We're already below that. Depending on where you look, we have support lines at 1930 or 1920. Now, at the time that I'm recording this, it's about at 1930, but that 200-day moving average, it's all the way down to 1850. Now, 1850, that's been my buy number for a while now. There's a few reasons for it. I mentioned at 2050 that I was waiting for a 10% drop. It's around 1850. And the 200-day moving average, that's been in that ballpark for a while too. Now, the news prior to a few weeks ago, that wasn't supporting any of that. And I don't get too caught up in technical analysis if the news cycle has changed, which it did. At the time, it looked like we'd finally hit the rate pause and everything seemed to be telegraphing continued moves above $2,000. Now, I wouldn't say that that's a good example of how technical analysis is always right. I would just say that it's another example of how forecasting really shouldn't be relied on too much because we just never know what's going to pop up in the news cycle. The reason that I pay attention to the price in the first place is simply that I'm planning purchases around drops now. Now, I'm still assuming that I'm going to be making somewhat scheduled purchases, and I'm at a running goal, so had that not been the case, really there'd be no somewhat. I'd just be trying to pick low points each month, making the purchases then. If we look at last month, just in May, gold hit $2,050, so something like $1,920 this month. That's a pretty attractive price. I would maybe jump in on that. Now, if we get a big drop to $1,850, I'll try to buy a little bit more, and then I'd probably slow down, enjoy that ride again for a few months. But current prices at the $1,930 range or lower, that already feels pretty good. And looking forward, I don't think a whole lot has changed. Powell gave a little bit of a mixed message. He said that it would make sense to push rates higher this year, but we keep getting that wait and see message. Now, right now, a lot of the analysts are expecting 2 more quarter-point hikes by the end of the year. That's based on the most recent message. And I mentioned this before, but this pause is really no longer definitive. We got the pause, and then we were told, well, it wasn't really a pause. It was just a skip. It really doesn't tell us much. It's hard to say what that does for prices this year, at least, if we continue to see that non-pause pause or a skip and then a wait and see message. Now, there's more going on that's affecting the price of gold and silver, of course. The UK, they just hiked the rate by 50 basis points. Chinese recovery got tripped up, but the dollar strength has a big impact on the price of gold. And what we were seeing is the price of gold was dropping actually as the US dollar strength was going down as well. Now, usually it's the reverse. So as or if the dollar improves, that's going to be more pressure, downward pressure on gold. So that's the bearish take in a nutshell. Now, as for buying triggers, again, for me, it's 1850. That's been a trigger for a while, but I've been waiting long enough that I'm probably due. I'm probably in for a purchase anywhere below 1920. Now, I'm not giving that as any kind of advice. I'm just saying I'm ready to get some more gold. Now, this is kind of a funny time. I get excited to buy when prices drop, but the crowd buying behavior is typically the opposite. The crowd gets excited when prices are going up. Nothing new there. Now, it might not seem like an interesting time, but if you look at the current conditions, the Fed has to pause rates at some point. That's going to be good for gold. They also have to bring rates back down at some point too, and that's going to be even better for gold. So I'm happy to buy on the downslope, knowing, or at least assuming, that there's a ramp down there. So let's call it good there. Making long videos on where we think prices are going just doesn't make a lot of sense. We know where that moving average line is. It's at 1850, so we have a practical marker. But I'm curious what you think. Where do you see prices going, and what do you think a good buy price is? Are we already below it? We might be. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.